So we provide top line exposure for our shareholders to gold mines, which means that we insulate them from operating costs because they're getting a fixed percentage of the revenue. And we enjoy the upside in the gold price, but also enjoy upside in the exploration success of our operating partners.
Welcome to the My Future Business Show, where we get you in front of your best audience and keep you there. Not only are we interviewing the biggest names in business to help you become even more successful, we're inviting you to book your spot on the show to help you grow your business. So at the end of the call, make sure you fill in the interview application form at myfuturebusiness.com/interviews.
Hello, and welcome back to the show. It's wonderful to have you here. I hope you're doing really well, and thank you for all of your support. I was just talking with my next guest about all of your support and how our listener base is expanding quite rapidly. It is so exciting to know that the show is attracting an amazing audience, and it's making a difference for you, just as our next guest is making a difference in the gold space. Welcome to the show, David Garofalo.
Thank you for having me on, Rick. It's good to see you again.
Yes, absolutely. You and I spoke, I think it was September last year, and I know that there's been a great deal that has occurred, positive things that have occurred since that time. We're going to do an update on all of those things, but I've mentioned earlier offline, David, that our audience base has grown, so I think it's useful for us to go over some old ground, if you don't mind. Would that be okay?
Oh, of course.
Fantastic. Well, look, where are you calling in from today, David?
Vancouver, Canada.
Oh, beautiful. And what's the weather like? I know ours is a bit hot over here.
Yeah, well, we're the tail end of winter here. It's still a bit wet. It's a little bit cool, but summer's on the horizon.
See, since last time you and I spoke, David, we've had the festive season, and a lot of things might have happened for you personally. Have you had much time to enjoy the festive season? What's happened with you since then?
Well, you know what? We got all 8 of our kids in town at the same time, and it's been a few years when I was able to get all of them together. And then COVID came through the house, but fortunately we were asymptomatic and we were all vaccinated, so we got that out of the way. And I think we started the new year refreshed. So I'd say it was a good holiday all around.
Fantastic. Now, tell me about where you live. I think the audience would love to know a little bit more about where it is that you are.
Sure. I live in Vancouver, Canada, which I think is the most beautiful city in the world.
Of course.
I'm biased, but I live on the side of a mountain overlooking the ocean. It's hard to imagine living in a better place where you can ski in the snow or on the water in the same day in some parts of the year.
Yeah, so in the winter months, you do a lot of skiing still. What's happening at the moment? Do you like to go for walks? What else do you do?
I like to hike, and I run. I do a lot of trail running, and I road cycle. You can do that fairly year round here in Vancouver. The weather's mild enough that I can get on the road quite frequently.
Did you find it difficult when the in-laws came over and when they left? Did you have a great time?
Yeah, we did, and it's a delight. A lot of our kids are adults now and independent. It's a delight to have them all together, even if it's for a short period of time.
Yeah, that's fantastic. You mentioned being asymptomatic for COVID, and we're all going for our booster shots and this and that. Well, most of us, I'd have to say. And I'm wondering, has that changed the way that you operate Gold Royalty Corp?
Well, we were born in the COVID period, and so we've been operating in a very disassociated way with some of my team in Toronto, some of them here in Vancouver. And some of them in Quebec and Nevada. So we've been able to operate on a decentralized basis. So if anything, the adoption of this technology, Zoom, Teams, and the like, has made life a lot easier for us to operate in this kind of satellite way. And that's ideal for the kind of business that we're running.
Yeah, fantastic feedback. Thank you. Now, for anyone who's new on the show with us, now David is the CEO, President, Chairman, and Director of Gold Royalty Corp. We're going to share what that's all about in a moment. And we're going to be talking about that particular company, about gold, and about, impacts of inflation and COVID and all the rest of it throughout this very exciting call. So I hope you're comfortable because we're just about to jump right into the core of the call. Now, first off, what's happening with Gold Royalty Corp? In fact, I'll go one back a step further. What is Gold Royalty Corp for those who don't know about you?
Sure. Well, Gold Royalty Corp is a royalty company focused on precious metals, and we're providing capital to operators, explorers, developers to help either build or expand their existing operations, and we take a royalty back in return. So we provide top line exposure for our shareholders to gold mines, which means that we insulate them from operating costs because they're getting a fixed percentage of the revenue. And we enjoy the upside in the gold price, but also enjoy upside in the exploration success of our operating partners. So to the extent they grow their deposits geologically, we enjoy a royalty on that. So really, it's the best of all worlds, upside to the gold price, upside to exploration success without exposure to inflating operating costs, which is a recurring theme in the sector right now.
Yes, absolutely. And everybody loves the upside and nobody likes the downside. So if we can avoid it where possible, that is absolutely fantastic. Now, I know that you have a lot of acquisitions going on, and at the moment, so much other things we're just about to talk about. But I'm wondering, David, if you could share, just for the sake of clarity for new listeners, what's your personal background prior to coming to Gold Royalty Corp?
Well, I've spent 32 years in the mine development and operations side. I've run a number of large cap companies, most recently Gold Corp, which I merged with Newmont back in 2019 to create the world's biggest gold company by production and market cap. That was the largest gold merger in history, $32 billion merger of the two companies.
Amazing.
Before that, I ran Hudbay Minerals, which is a diversified base metal producer based out of Toronto. I ran that for 6 years and built the Constancia mine in Peru, among other mines in the portfolio there now. And before that, I spent 12 years at Agnico Eagle as CFO during its formative years where we were building 6 mines at once. So I've been in the business, as I said, for about 32 years on the mine development and operations side. But now I've transitioned into the royalty business. It seems like everything I've been doing for the last 32 years prepared me for this moment. Where I think royalty space is really going to take off.
Yep.
Just because I think the operators are going to be pressured by cost inflation. And I think the best place for you to participate in the gold rise that we're going to experience in this inflationary environment is in the royalty business. It provides optimum leverage to the gold price and optimum leverage to exploration success without the exposure to inflating operating and capital costs.
Thank you. I'm just wondering if we're at an inflation high of 40 years and, basically people would often buy gold to hedge their bets, as it were. Is that still a good way to go, do you think?
I really do believe that. And, we're seeing inflation that we haven't seen really since the 1970s. I know the headline number says it's 40-year high, but I would say the headline numbers belie what's really happening on the ground because those CPI baskets tend to exclude the things that are vitally important to us, like food in our stomach, fuel in our cars, and a roof over our head. That's decidedly in double-digit territories in terms of inflation, those key items. And so I think we're seeing the kind of inflation we saw in the 1970s. And we're seeing that fueled by expanding money supply, which has really been unrelenting since the credit crisis over a dozen years ago. We're seeing supply chain disruptions. So that the lineups we're seeing at fuel stations, the empty shelves we're seeing in grocery stores, we saw that in the 1970s. I wasn't that young. I still remember, I was in my teens, and I do remember that type of phenomenon. And that drove all-time highs in the gold price on a real basis. Even as interest rates were starting to creep up, the gold price reached all-time highs in 1981 of about $850 an ounce. And the reason I say that's an all-time high, because you have to inflation adjust that to today's dollars. And if you did, you'd get $3,000 an ounce. So we're not even anywhere near what I think will ultimately be the cyclical high in this inflationary cycle we're experiencing currently.
It must be nice, almost comforting to have seen something like that as a cycle, the down part of the cycle, that things are going to have a brighter day. Would you agree with that?
Yeah, absolutely. Look, I think that gold has always been a very accurate barometer of underlying inflation. And I think the fact that gold has held its value, even in the face of double-digit inflation, means that it's doing its job. It's preserving your capital, because if you left it in a savings account where you're earning near zero on a nominal basis in terms of interest rates, inflation is insidious. It eats at your capital. You're losing purchasing power to the extent of 10% plus per annum, just leaving it standing there, whereas gold is protecting that value in this very low interest rate environment that we're currently experiencing.
I'd like to take a bit of a deeper dive into the supply chain issues that we're all experiencing globally. Ships are having difficulty getting stuff here and there, and it's really affecting everybody. As you mentioned earlier, the grocery store shelves are empty. I'm just wondering, all this being related to COVID, how does that impact gold production and the operations of businesses?
Well, certainly the mining business has not been immune to these supply chain disruptions. And so we've seen from time to time, at peak COVID, we saw almost 300 mines globally suspending operations. So there was a significant disruption in mine supply during that period. And we're seeing scarcity of supplies at the mine site. Quite often mine sites are in remote districts and in remote camps where you have to fly in materials or bring them in on barges in the summer season. And if those supplies aren't available during those shipping windows, mine sites can be significantly disrupted. So we're seeing evidence of that across the entire industry, and that has disrupted supply of critical minerals. And so we're not immune from that. And it's driving up costs in a dramatic fashion. We've seen some major blowups in capital costs on construction projects in the mining industry. I think that's going to be a recurring theme. And every major producer has sensitized their shareholders to increase in their daily operating input costs.
So just to provide an education for those who don't know much about your game, the gold industry, and things you do, I'm wondering if you could share some of the other types of inherent risks with gold mining.
Well, look, from discovery to first production, typically for a gold mine, it could take 15 to 20 years. And the reason that is because of a more difficult regulatory environment, the difficulty of engaging with the local communities and getting that social license to operate, that's becoming increasingly challenging. And that is amplified by the traditional risks that we have in the mining business. Geologically defining your deposits takes a long time. Engineering and making an investment case takes a long time. Raising the capital, this is a very capital intensive business with high barriers to entry.
Yep.
All of those issues add up to time, and time has value. And so it's becoming increasingly difficult to make a strong economic case for building new mines. And that's led to a supply squeeze on critical minerals, just as demand is picking up quite dramatically. If you think about it, we're all looking to decarbonize the economy. Well, we need mining to be successful to do that. Metals are critical to decarbonization, namely, copper. If you want an electric vehicle, you need 3 times the amount of copper to produce an electric vehicle than you do a traditional internal combustion engine.
Yep.
That copper has to come from somewhere, but we haven't, as an industry, reinvested significantly in exploration and mine development to provide that increase in supply that the market and the economy generally demands. And that's true across the entire spectrum of minerals that are required to make our economy function and grow.
So given that you mentioned the increasing demand on gold supply, is it becoming more difficult, and given that, I guess, the time that needs to go by to find this precious metal?
No, absolutely. There's a supply squeeze on the gold side. We haven't seen any significant investment in exploration and mine development for near 10 years now. Peak reserves in the industry occurred back in 2012. Since then, we've seen a 40% decline in gold reserves simply through depletion.
Yeah.
And we haven't replaced them through our exploration efforts and mine development. We've underinvested in that regard. Now it's become an existential crisis, which is why you've seen a very big pickup in merger and acquisition activity in the mining business of late, because these larger gold producers, if they're not finding it in the ground, they're going to have to buy it.
Yeah, absolutely. We're going to be talking about acquisition momentarily. Now, hence the reason I think also is an obvious reason to be involved as an investor as such in Gold Royalty Corp, because you're one step removed, aren't you?
Well, that's right. Again, we're insulated from operating capital costs risk, but also we have a significantly more large diversified portfolio than a traditional operator would. We have 191 royalties in our portfolio. No operator can hope to own 191 operations. So we have broad-based exposure from early stage exploration right through to production. We have 6 producing royalties. We have 11 in construction. So we have a lot of growth embedded in our portfolio, and a lot of optionality because of all that early stage royalty optionality we have in our portfolio provides embedded growth for the foreseeable future. That diversification is absolutely critical in an environment where it's difficult to mine. There's a lot more political risk. There's a lot more fiscal risk around mine sites. With higher metal prices, governments tend to claw back more in taxes. We're insulated from all that because, again, we only get a percentage of the top line of the revenue before anybody is paid at the mine site, we get our share of the revenue. And see, that's what really distinguishes us. It's a very low risk way to play gold because you get the upside without any of the downside associated with operating a mine.
So you're bringing in capital when you're building relationships. And on that thought, David, I'm wondering, how does the relationship initially trigger, and how do you choose somebody to do business with?
It's an excellent question. And collectively in our board and management, we have 400 years of mine operating and mine development experience within our board and management broadly. And that's given us a key competitive advantage because one, we've been operators and mine developers ourselves, so we have a clear-eyed view of the underlying risk associated with anything that we invest in. So we can do due diligence, I think, second to none in the industry because of that depth of expertise, subject matter expertise, and just broad-based industry expertise within that board of management. But also, given the seniority of that group, it gives us, I think, unmitigated, unfettered access to virtually anybody in the industry. That's the opportunity that we have, and the key competitive advantage we have relative to our peers in the space.
Yeah, it's nice to know you've got competent leaders at the helm of this ship, that's for sure and certain. Thank you for sharing that, Dave. Now, I'm wondering, what are some of the significant accomplishments that GROY has actually made this year?
Well, it's a great question, and it's quite remarkable. We've only been in existence as a public company for 10 months. We IPO'd in March of last year with a relatively modest portfolio. We had 14 royalties to start. And on the basis of those royalties, we raised $90 million US and achieved a post-money valuation of $200 million.
Wow.
Having acquired that currency in the marketplace, we went about consolidating what's a very fragmented industry. And we bought 3 of our competitors last year. First Ely Gold, and then Golden Valley Royalties, and then Abitibi Royalties. And that allowed us to grow our royalty portfolio from 14 at IPO to 191 today, and introduce a significant amount of cash flow, and also allowed us to declare an inaugural dividend 10 months after we went public.
Very nice.
That will pay a little bit less than 1% yield, with the prospect of significant growth in that dividend over time, because we have the largest compounded average growth rate in revenue in the industry by consensus estimate, with our revenue growing by over 60% over the next 3 years. So the prospect and the potential to grow that dividend, I think, is very high.
Very exciting times. Now, I'd love to, obviously, when you are talking about acquisitions, now I'm wondering, when you compare GROY against your competition and you're looking for somebody to, take on, as it were, how are you different to them, and what makes them a good partner for you?
Well, we're exclusively focused in the Americas at this point, and 75% of the underlying value of our business is focused in the 2 of the best mining jurisdictions in the world, Quebec and Nevada. And so those are the best from the prospect of high prospectivity, the 2 of the best gold districts in the world, low regulatory risk and low political risk. And so that gives us a pronounced low risk profile relative to our peers, but also the diversification of our portfolio, 191 well balanced across the value creation chain in the mining business, from early stage exploration through to production. That diversification is second to none. We have almost as many royalties as the large cap players in the space, including Franco-Nevada, Wheaton Precious Metals, and Royal Gold. So that distinguishes us among the smaller cap players in the space.
There's always analysts in the picture sitting in the background looking at what the valuation is, and I'm wondering if people are on this call sort of saying, well, how do I know for sure? Where can I go and check this information? What would you say to them?
Well, there's a couple of analysts that have already launched research coverage on us, Haywood and H.C. Wainwright, and we happen to be their top pick in the royalty space. Both of those investment dealers have chosen us as the top performer in 2022. We were the top performing royalty stock in 2021. And I have a feeling, given the growth in our revenues and our cash flow over the next year to 3 years, I think we'll continue to significantly outperform. Within our IPO syndicate, we also had BMO, we had Raymond James, so Bank of Montreal, Raymond James, CIBC, all of which are poised to launch research coverage on us this year, which will only broaden our appeal to the institutional investor universe.
So what sort of price targets do you think they're aiming at?
They're all looking at least 50% upside in terms of their target prices, which I think gives them the confidence to make us they're top picks in the space, the two companies, the two dealers that are covering us. But I'd urge you to read the research on your own and make your own decisions. But I'm delighted with what we built over the last year, and we're already working on the next deal. We launched a bid for Elemental Royalties, which owns a royalty on Carlawinda in Australia, in Western Australia, which is Australia's newest gold mine. And that will only complement our portfolio because it brings another tier one jurisdiction to complement what we already have in Quebec and Nevada.
Some of the latest things that have happened, you've talked about the definitive agreement for a secured revolving credit facility of up to $25 million. That's very exciting. Tell us about that.
Yeah, it is. And in addition to that, we have $38 million of cash on the balance sheet. We have no debt. So we have over $60 million of available liquidity between our cash and our credit line. So we're well capitalized to continue to exploit new opportunities on the royalty side. So we'll be active on the acquisition side, whether it's through M&A with some of our peer companies or picking up individual royalty opportunities because of our strong balance sheet.
Now, we talked about, our modus operandi, as it were, in terms of working remotely in some respects. But you also have another announcement about the implementation of virtual attendance measures for your annual general meeting. What happened there?
Well, that's become a common phenomenon now in the COVID universe. Nobody's doing in-person AGMs. And so we're doing ours online. That'll be next week. And I'd urge our shareholders or prospective shareholders to please join us at the AGM and we'll give you an update on our activities.
One of the major things that really stood out for me was the acquisition of Elemental Royalties. Tell us a little bit about them and why they were a good fit for you.
Yeah, so as I said, Elemental owns a number of royalties, 9 royalties, which would bring our overall royalty portfolio to 200 royalties, one of which is on the Carlawinda operation, Australia's newest gold mine in Western Australia. They also have a royalty on Burkina Faso, on one of Endeavour's gold mines, a number of other operations that are cash flowing currently. So it certainly complements our portfolio of growth. We have significantly more growth than they do. They have more immediate cash flow, so it definitely complements our portfolio. And as I said, brings another tier one jurisdiction into the portfolio to complement what we already have in Nevada and Quebec, two of the best gold jurisdictions in the world.
Now, I got fairly excited when I was reading your news releases, and I had to go over it a couple of times as we talked about dividends recently, but you also have your inaugural quarterly cash dividend program. What's that about?
So we're paying 1 cent per quarter, which is just under 1% yield.
Yep.
And as I said, given the increase in revenue, we have the highest compounded average growth rate in revenue by analyst estimates of over 60% over the next 3 years. It gives us the confidence not only to pay this dividend today, but we feel with some confidence we can grow that dividend in the medium term and continue to return increasing capital to our shareholders.
So we touched on, I guess, your team there. Yeah, you've got, was it 300 years or some amazing amount of years behind your leadership team? Is there any chance we could talk a little bit about the people behind the team?
Well, what's remarkable, and these are all very high performing with people with deep experience in the mining industry, collectively over 400 years. But what's remarkable is we only have 6 full-time employees, and this is a very scalable business. We could run a business with 10 times the number of royalties with the same number of people. So these are high functioning people with long experience, whether it's in banking, mine development, operations within this small complement and board of management, which gives us the ability to grow the business, get access to opportunities before anybody else sees them. But also, given the scalability of our business, we don't need to necessarily grow our employee base significantly in order to deliver increasing revenue and growth generally.
So when an investor is looking at this, what type of investor are best suited for this opportunity?
Well, I think anybody that's interested in gold as an asset class or looking for ways to invest in gold,
Yep.
I think this is the best possible way to do it. We should all have a bit of physical gold in our portfolio, and I certainly believe in that. But if you want leverage to increase gold prices, royalty and streaming companies, and gold royalty in particular, provide you optimum leverage because, as I said, it gives you upside to the gold price, upside to exploration success, while protecting you from operating and capital cost inflation, which I think is going to be a challenging issue for the operators in our industry for the foreseeable future.
So investors are often hands off, but many are hands on and want to, talk directly with the likes of yourself. Given that we're doing virtual meetings, how often does that happen? And do investors have opportunities like that?
Certainly. I mean, there's a number of investor meetings that we have in the normal course. There's mining conferences, all up to this point have been virtual lately, but we're starting to see live conferences come back on stream as hopefully the COVID crisis goes into our rearview mirror. And so in the normal course, we're out visiting investors either virtually or in person throughout the year on a fairly regular basis. And we're participating in platforms like yours to get the message out to a broader retail community. What I would say is if you ever have any questions on our business, please visit our website, goldroyalty.com. Very easy to remember.
Beautiful.
We answer our emails. We answer our 1-800 number. If you have any questions, we'd be delighted to hear from you.
Yeah, that's wonderful. And I think that really sums up where we're at today. And, David, it is always a pleasure getting an update from you. And I really do look forward to another opportunity to do this in the near future when we have some more great news coming up. Now, with the next, 3 to 6 months, is there much happening that you can reveal for us?
Oh, lots. As I said, we have the bid for Elemental outstanding. We hope to be able to close that in April, and that'll, again, bring us up another level in terms of the number of royalties, our market cap, our liquidity. So that's exciting. But our operators, our operating partners have a lot of news flow coming over the course of the next 6 or 9 months with updated resources, expansion plans underway, increasing cash flow. So please watch the space. When you visit our website, please download our investor deck, our slide deck, and you'll see the many catalysts that we have in our story over the course of the next 6 months to a year, which we think will drive value and hopefully drive increased share price performance.
Well, there you go. Everybody who's on the call today, you have it straight from us to you. If you're interested in gold, and which you probably should be somewhere along the line, you definitely need to go check out goldroyalty.com. And David, as always, such a pleasure spending some time with you on the My Future Business Show. Thanks for joining me.
Thank you, Rick. Likewise.
Thanks for joining us today. If you enjoyed the call, then make sure to subscribe, leave a comment, share us with your friends, and book your spot on the show at myfuturebusiness.com/interviews. And if you're looking for solutions that will help grow your business, then visit myfuturebusiness.com/shop.